What's up, good people? Welcome back to Better Today, where our focus is to become 1% better every day and watch that compound over time. I'm Christopher. I'm here. I'm going to just bring up some charts, the weekly recap. I want to look at some charts that I'm looking at into the week coming up. And I want to pose the question: correction or crash? Which one are we in? I see that coming every time we have a 5% pullback in the market. Everybody wants to worry. Are we crashing? We're crashing. Oh no, the sky is falling. I personally am under the belief that this is a seasonal correction. Happens all the time around this time of year. So the first chart we're going to look at today is the VIX chart. Now, as you guys may know, the VIX is just a volatility index. It basically is uncertainty in the market put on a chart. So a low score on the VIX or a low price on the VIX, anything 15 and below, means we're relatively certain of what the market is. Things are going well. But as that price increases and you get into the 20s and especially the 30s, anything above like 25, there's some fear in the markets, which typically is accompanied by falling prices. So as the VIX rises, stock prices fall, and vice versa. So as you can see, since about July, the VIX has been in an uptrend. As you can see, we got low, higher low, and high, higher high. We're moving up in price, as you can see. Now we're butting up against this here 200-day moving average as of last week, as of Friday of last week, and you see we rejected it here. But because we are in probably the worst time of the year for stocks, I would expect to see more upside for this volatility indicator. But as you can see, we're at 1730. We're nowhere near the upper range of the 25s or the 30s when real panic is in the market, or even pandemic times. I think we got all the way up to about 80, 85. So crash, nah. Correction, absolutely. And did we need a correction? Absolutely. I mean, stocks have been on a tear all year. This is giving us a chance to actually enter some of the better performing stocks at maybe not great valuations, but better valuations than all-time highs. So that's what the VIX is telling us. I'm expecting probably more upside for the VIX, maybe up into this 400-day moving average that we got here. So the golden moving average is my 400. The purplish lavender is my 200, and then I've got the 9 here and the 20 here, as well as this gray one, which is the 72, and that's on all my charts. It just helps me look at trend, helps give me areas of value. I know most people are looking at this 200. A lot of people look at the 9 and the 20, the 50 and the 100. So I just kind of go right in between, hit them with that 72, and then that 400 is just a personal level that I like. I haven't heard many people talk about it, but I like the 400 moving average. Okay, so moving on to the Qs. So last week we did speak about the Qs, and I did let you guys know that I was short from about the second day of August 2nd. Once we closed below this 20-day moving average, I did buy some puts as we bounce back into the 9 and reject it. I did cover into this 72 EMA on Friday. We opened with a big gap down to 355. I closed my position. I only had a week left on those options, so I needed to close them basically anyway. But I closed them mostly because it reached my target, first of all, but also because the 72 EMA, I'm expecting some sort of relief rally into next week with Jackson Hole coming up and things like Nvidia earnings. My thesis had played out. As you can see, like I said, August, September, worst times of the year for stocks. So as soon as we closed below that 20, that gave me a signal to start looking for shorts. Price declined. We came up. We touched this 9 EMA a couple times on the way down, which I added into, used it as points to add. But now I'm expecting probably a push back into the 9 coming up this week sometime, and from there we'll see if there's more upside before the downside. But I do kind of expect price to come down here to this 350 area. Actually, I'm expecting price to come down and interact with the 200-day moving average sometime in September, hopefully, which would be around the time I'll let up on going short, let up on the puts, and start loading up on calls for Qs going into the end of the year. But yeah, we're in as of the last couple weeks, we're in this looks like the exact opposite of the VIX chart. As you can see, the VIX was going up, and we got price on a decline with two higher lows up here, and then once we broke out of this little range here, it's just been downside ever since. We did get a little bit of a relief bounce on Friday after we opened on a gap down to about 355. We pushed back into 358, 360, right around this 72. As you can see, it's kind of putting it in as resistance. But yeah, this week I'm expecting at least a relief bounce into the 9, or this trend line I got, the 9 or the 20 in between, are these two EMAs that I've got here. I also want to take a look at this Microsoft chart here. As you can see, Microsoft has printed kind of a double top here. This is the highs from late 21, late 21, almost early 22, right here, the previous all-time high. And over this last year, we were able to get above the previous high, and we ran up to about 366, but we could not continue. We came back down, retested this area of resistance here. These thick ones are my monthly resistance levels. So I plotted these out on the monthly chart. But as you can see, we came up above. We did put it in as support over here, but then once we got to about 360, 366, it's been downhill ever since. We did break below that monthly resistance level. Now we're testing this monthly resistance below. A lot of people are calling a double top here, or thinking this may be a double top or failed follow through, and I would agree, but I don't think this means we're in for a crash. I just think price got a little ahead of itself, and it is now correcting. I'm expecting a move probably down to this, once again, this 200 day moving average, which would be about 300 even, which I think would be a great. But below that, we're looking at about 280, 281, this 400 day moving average, as well as this monthly support here. Because as you can see, we got a touch here, we got just about a touch here, a touch here, a touch here. So I'm expecting price to pull back. Now we get under 280, then that's where I might start thinking this is a little bit less of a routine correction. But even then, we get into about 250s. I'm looking to buy down here by these trends that we have down here. So, but price is respecting this 9 EMA yet again, pushing down. We're just making lows. We cannot seem to catch a break within the last month, but that is routine at this time of year. Okay, guys, so I want to take a look at Tesla as our last chart for the day. Looking into this next week, I'm only pulling this one up because I've been seeing a lot of people basically want to call say Tesla's in a head and shoulders pattern. And what they're saying is this being a shoulder here, this being a head, and then they're saying this is another shoulder. But I personally believe we had a head and shoulders pattern back middle, from this shoulder to this head to actually this shoulder here, and then that played out with a move to the downside of about, I want to say 50%, 75%, a 75% move to the downside. And as you can see, we broke the neckline, which would be this monthly support here at about 195, and we came down, we broke it, we put it in as resistance, and then we finally broke above. What I think we're doing right now, we pull back up into this resistance level. Of course, we see some sellers coming in up here at this 275 level. I believe we are coming back down to this $195, $200 level just as a retest. We got to put this in as support before we move higher. I believe that Tesla is not forming a head and shoulders pattern here. I believe it already formed a head and shoulders pattern over the last 2 years. Now I think we're in a recovery pattern from that. We finally got back above this neckline at 195. Major level of support here. Tapped so many times. We got from 2021, tapped about 3 times, then came back down and tapped it a few times. 2022 and 2023, we were below it. We started off below it, and it was resistance. But mid 2022, we did break above, and I think, as you can see, we've got this trend forming from the beginning of the year. I think we're going back to see if this trend is still intact, but I don't think this head and shoulders pattern here is a head and shoulders pattern. I think it's a recovery from a head and shoulders pattern. I could be wrong. We'll find out in this upcoming week. But yeah, guys, I just wanted to check in with you guys and let you see some of the charts that I'm looking at coming into this next week, and kind of explain my thought process behind it. Once again, we'll be doing this every week, so check in with me here on YouTube or on Twitter at babyfaceyoung_. It's your boy. Better today. Let's be better. Let's do better. Let's get cheddar. What?